Good evening, everybody. It's Friday evening. My name is Ryan. I am the creator of the Independent Investor Channel, Cornerstone Capital Solutions. We've been going now for about a couple years, and I've been sitting back on the sideline a little bit beside myself. I'm excited about the growth of the channel. The word is really spreading. It's exciting. I've always said many times I use social media for the sheer reason of reaching multiple people. And I'm getting a lot of validation through the channel. If you guys would do me a huge favor, if you're in the group right now, if you could please kick over a thumbs up if the sound is good. Let me know that you guys are hearing this. The first thumbs up that I see, I'll continue on without adjustment. But if I see any type of thumbs down and you guys can't hear me good through audio, awesome. Thank you, Miles. I appreciate that. Want to make sure that you guys are getting through on the message. I've got a lot of representation from around. I've got UK on the list here. They're certainly on the bucket list. I've got to check out London for sure. I've been to Paris, but I couldn't make it up that way. But I probably look to retire part of the year when I get a little bit more into thinking about retirement abroad. I absolutely love Europe. I think it's amazing, and it's really cool to have some representation in the group. Must be somewhat frustrating a little bit in that, you know, I'm a little bit one-sided when I talk about my investments, but I do apologize ahead of time. It's really all I know. And that's why I spend a lot of the time on the fundamentals of investing. I just feel like there's not enough attention put on the fundamentals. You guys know I've been turning out my dividend portfolio series through the channel, and I've done that carefully after going through a lot of explanation on how important it is to build up different pillars within your investment account. Don't always look to be a dividend investor exclusively, okay? Just because you have a dividend portfolio doesn't mean that you can't have, you know, a growth section in the portfolio. And the idea is not to let them muddle together. Look at them as individual pillars: the cash pillar, the bond pillar, the dividend portfolio pillar, and the growth pillar. And that's just what I want folks to understand about looking at all the totality of options. I missed the passive option as well for you guys that are hitting me up and saying, you know what, Ryan, I'm sold on the idea, that's at the end of the day, that information is worth an infinite amount of money if you can really sit back for a second and say, well, hold on a second. You know, Ryan's talking about two different accounts here. If I opt for this account over here and I opt for this account over here and put the exact same holdings in that account and put them on a side-by-side comparison, the self-directed account is going to win out every time. That's just a fact. This is going to be restricted. And I think a lot of folks are really getting excited about the prospect. And I love being the one, if I'm the first one to bring it to you. I think we're meeting part of our mission on the channel in just really introducing folks to what their options are. And I think at the end of the day, folks really need to understand that it is an option. But furthermore, they need to understand what the difference in the two programs are. And I contend that they're vastly different. So I really wanted to touch on, you know, the fundamental approach before you even invest one single dime in the stock market. Everybody wants to just build cash, and then jump into the stock market, you know? And I think we build cash with the eventual, we want to jump into our first stock, you know? I offer my stock picks, and some people come through and say, good stock picks, Ryan, but I like these stock picks over here. And I think that's all really healthy discussion. I really do, but I do not want to lose sight of the discussion of getting somebody prepared to understand why they're doing what they're doing. If you can sit across from me and say, Ryan, I understand the benefits of self-directed program, and here's why, then we're actually really winning the battle. So if anybody's in the group here for the first time tonight, I'd love to welcome each of you guys. I've got a good friend of the group, especially on my Facebook group, and a long-standing follower of the channel, I've got Noella in the line here from Canada. Certainly some news out of Canada. I'd like to keep those discussions to a dull roar if I can this evening. You guys certainly know what that is, but I actually I know how to pronounce her name now. I'm excited about that. So I've been mispronouncing it for a year. So I apologize for that, but doing some really, really good work with her. I've got Lydia Santiago, who's another channel creator, doing a good job. Again, welcome. I appreciate your support of the channel. And I kind of gave some kudos last week, and I'll give them again. I just think we need to foster a little bit more of a dialogue to get people to speak about investing a little bit more commonplace. You know, I just think it's right up there sometimes with politics. And I don't think money discussion or true financial stewardship needs to be in any realm whatsoever associated with politics. Certainly, you're going to have your own views about what that is, but I think people can really benefit. And I think people are really more interested once you kind of break through that barrier. People are really interested in understanding different people's approaches and techniques, as passive as it may be. But I think it's extremely interesting to broach those topics. And the quicker we can streamline it for folks as early as we can in life, the better off that I think we're going to be in promoting some of that dialogue. And hopefully we're offering that. I'm kind of right in the middle or toward the end. I've got 2 more dividend portfolio videos to turn out to you guys. I hope you don't hold a grudge on the strategic rollout of that video. I did that for a specific reason. I wanted to break it up so it wasn't so cumbersome and I could deliver 5 picks at a time. But man, I was going through my dividend portfolio and I was like, wow, that's look what I've built. It's something to be proud of. And I'm not one of those guys that wants to toot my own horn. You guys need to understand I've been building that over the years. There's a lot of salmon in Alaska caught, you know, that's funneled into my Roth over the years, you know, a lot of frugal savings and spending and giving up things that maybe I could have justified going out and buying. You know, I work with a lot of other military folks, and that seems like the purchase of choice is to go buy the choicest ride, you know, $50,000, $60,000, $70,000. And I've just, those large expenditures really never were that attractive to me. I didn't really see the point in it at all. And I was just, you know, I'm proud to offer that to you. The cool thing about the 25 picks that I'm in the process of rolling out to you guys is that it's actually mine. So, you know, right, wrong, or indifferent, that's what I've got. So it's kind of a cool testimonial to kind of show you guys what it is that's possible in the stock market. We could just kind of killer group tonight, man. Everybody's making their way in. I want to welcome you guys on a Friday night. I'm going to go as long as I can this evening. I'm going on very little sleep over the last 2 days. I had an engagement creep up on me, but I am here devoted for you guys, and I'm going to try to focus on the group as much as I can. So I'm going to scroll back up here. This is really difficult to follow. I don't know why they can't make this a little bit easier to follow, but I'm thrilled to be with you guys. The stock market, as you guys know, if you pull up a chart from today, it's unbelievable. It's a roller coaster. It went up, down, up, down, up, down. And really, it's for the last couple of weeks, the volatility has went up. I'm probably going to come out with a specific video talking about folks that have over $500,000 in exposed to the stock market. I think it would absolutely benefit each and every one of you to take a hard look on getting some money safeguarded right here in this particular position. And I want you guys to understand as well, you know, my advice for somebody with, you know, 250,000, 500,000, 750, or, you know, above $1 million, $1.5 million may be different than somebody who's looking to just start their positions in, you know, the S&P 500 or a total stock ETF or an index fund, you know, with less than $10,000. So my advice for, you know, the starting portfolio is going to be absolutely, man, your time to invest is as of yesterday. Like if you're on the fence about investing, just do it and start those validations. hesitant with the current state of the stock market, then introduce the amount of exposure that you're comfortable with. That's really the key that I push across. You know, there's a lot of folks online that are talking about, well, just invest your first 5,000, invest your first 10,000, invest it all in the stock market. I tend to take a little bit more of a, you know, a calculative approach to the stock market, in that if you do have those hesitations, look, if we were in a 30% correction or a 30% prolonged bear market, you'd be hearing a different tone from me. I'd say, yeah, invest it all. If you've got 50,000, now's the time to put all 50,000 to work. Well, we're just not in that condition right now with the market at an all-time high, volatility kicking in. For you guys that follow my channel and I'm interested in the stocks that I do pick up, it's very, very rare that I go this long without picking up more shares of stock. I have neither sold stock or bought stock over the last 2 weeks, and that's a truth. It would be just absolutely crazy cool if I could get on here and talk about the tens of thousands of dollars that I've spent on stock. I just don't see the point. I just don't see the point. There was a one-day buying opportunity in Apple computers. And that would have been your time to pick up Apple. Certainly being provided more and more of a buy point on Amazon and Google. But for you guys that took advantage of those on the dip and got a good entry point, if you had taken my advice from my video yesterday, you would have had one day to pick up Procter and Gamble. So, you know, it's interesting, out of these 25 stock picks that I've been talking about for the last few days, it's amazing that Apple Computers is not on that list. You know, Disney is not on that list. You know, I've got a lot of really good holdings in my portfolio: Google, Alibaba, JD.com, you know, Salesforce. Those companies I also own, but they didn't make the top 10, top 25 dividend aristocrats list that I'm sharing with you guys. So kind of ironic, you know, that's this strategic look and say, you know, what are some of those stocks that you'd want to buy forever in your portfolio? And it's just fun to think along those lines. You know, you may not buy it tomorrow, but maybe you want to start to accumulate shares in Apple. Maybe you buy a share per month. You know, maybe you save up for 5-6 months and then buy, you know, that chunk of stock right all at the same time if you're subject to the fees. If you're in M1 finance, you don't have to be subject to those fees. You can invest anytime you want. You can fund that account up. So it's really, really cool. I'm going to scroll down here, man. Like I said, I've got UK, I got Cincinnati on the line. I've got somebody calling out. Ollie's World of Finance was one of the very first YouTube channels that I followed. I think he does a great, great job. One of his best videos is how to read a balance sheet. It's really good. He actually made it for Ryan Scribner's channel. One of my favorite videos he does. It's fantastic. It's really, really good. I think he covers Disney. Of all things. But yeah, I mean, we'd love to have him on the channel. I had Jake come on last week, just right at the end, and I missed him, and I actually hit him up directly, sponsored him on my channel. Love to see him pop in here. That'd be cool. But Avi A, happy Friday. I'll never forget this week. Found out I'm having a baby girl, so I took 2 10-year bond notes, long matured, and turned them into a 529 tax-free growth for my little one. That's really cool. I made my 2 little ones investors right away. Actually, they've got a pretty healthy portfolio themselves. I did the same thing. Congratulations to you. That's a life-changing event for the better, honestly. I'm not really one of those folks that prescribe that children will make you go broke, or, you know, they're going to break the bank. I never really saw that. I just, I enjoy buying things from my children more than I do me. At this point in my life, I get way more benefit out of it. I don't need anything at this point in my life. I'm happy with my truck with 200,000 miles on it. I'm happy. I bought the truck when I was a non-rate. So all you military folks out there can appreciate that. I bought it when I was an E3. I still have it, and I'm not an E3 anymore. So it's really cool to have you guys in the group, man. I'm going to scroll down. I got the Midwest. The Cincinnati's in the group here, man. I used to live up in that area. It's very cool. I've got Robert Lapointe in the group. Welcome to you. Is actually pronouncing my name correctly. That's kind of cool. If you guys are new to this live feed, you can honestly tell I'm a little bit more personable and less robotic. And that's actually something I really enjoy on this live feed. I actually get to be myself and not so scripted. You guys know I don't script my YouTube videos, but this is kind of a cool thing where I can come in here and just converse, right across the table from you guys. And hopefully we can get into some dialogue. If you've got some burning questions, I have excellent questions come through the community every single week, and I'm putting in a lot of hours responding to the comments. Some I give a little more effort to than others, and that's I'm not trying to be selective, but certain comments definitely strike me a little bit more than others, and I feel like if I get an impulse to really jump on a solution, then I'll do that for you. But this is kind of a cool way to to just engage with the community and come in, strike up a dialogue. So let's kind of get into it a little bit. You guys are kicking around the idea of Sears. That's pretty crazy. I added HDV to my wife's Roth this week as a Fidelity user. HDV iShares US Quality Dividend ETF is free to trade and sports a 3.5 yield. So Avi A is hitting me up there with a nice ETF. The equivalent over on the Vanguard side is VYM. What I'm going to be doing, since we're on the product topic on the Independent Investor channel, you guys were hitting me up and asking me, okay, I'm sold. I get it. My fundamentals are good. I've got some cash savings. I'm ready to go. And you can use these, for example, the portfolio stocks that I'm rolling out to you guys as actual products that you can put inside your self-directed account. But I'm going to actually be doing a grouping for you guys on what my top ETFs that cover the S&P 500, my top ETFs that cover growth, top ETFs that cover growth and income, some of the ETFs, how much ETFs under the bond exposure you guys should have. So I'm going to be breaking that out. I mean, we're at that point now where we can start to roll out product. And I just feel like this is where a lot of the value is on the channel, because I really think it's important to explain why it is we're doing what we're doing. We build up to that account, and so many people want to just jump in and buy the stock right away, as opposed to understanding and building up why we're doing what we're doing. What type of investor do you want to be? What products can satisfy those specific needs in your portfolio that are going to be most in line with who you want to be as an investor? The cool thing about it is you don't really need to hit it on the head right away. You don't. You're going to have a better idea of who you are as an investor the further along you get, but you've got to start somewhere. And the best experience that you're going to get in the stock market is socking away years under your belt, getting that experience for yourself. And learning through some volatility. I mean, for you guys that are new investors, let's say under a year, you've subjected your portfolio to some volatility. So it's a good test for you to look at and understand how your portfolio has reacted to that. More importantly, it's very important for you to assess how it is that you've reacted to it. When the stock market goes up, 500 points in a day, they get every analyst on television to talk about, how bullish the stock market is. And then the very next day it corrects back again, and they get everybody out there that's a pessimist on the stock market. And I think it tends to exacerbate and especially cloud a lot of people's judgment on the stock market, in that they hear something, to allow them to justify just selling themselves off of the stock market. And that's just really, they're not going to sell their product if they get on and talk about stuff that, we tend to talk about on the Independent Investor channel with regard to buying good quality stocks and just holding them long term. I mean, have you ever asked yourself where you think Apple Computers is going to be in 20 years? You know, look back into the historical performance of a company like Apple Computer. Heck, do that. Run your single stocks through a 5-year rate of return test. I think you'd be amazed at what the rates of return are over the last 5 years in some of your good stocks. I mean, some of them are up into triple digits with no problem. So I really think that's awesome when we're offering stuff like that. Now, the thing you guys need to remember too, if you're in the group and you're seeing those and you don't have an account yet and you're still in the process of identifying what broker you want to go with, you guys are really missing out. You really are, okay? I have discovered on Merrill Edge some of the very best portfolio building tools on there. And I'm actually using the tool to help me in my aggressive style. I put the self-assessment on my Facebook group. I posted it in the discussion so anybody can go in there. You don't have to be an account owner. I just pulled the PDF off and threw it in the Facebook group for you guys. And I went through the exercise myself. I thought it was really awesome. I had never done anything like that. I've always just evolved in my risk tolerance over the years and just kind of fought through the trenches a little bit, but I've never really had that opportunity to do a self-assessment to see if I'm a modestly aggressive or a modest investor or, a modest aggressive or an aggressive or I think there was one more category. I think I was the highest one, and I think it called for a 90-10 or an 80-20 split between stock. But what it does is, well, what kind of stock does it tell you to buy? The cool thing is when you get in there, it'll tell you, hey, you need, X amount of emerging markets. You need X amount of international exposure. You need X amount of small cap, X amount of large cap growth, X amount of large cap value. It told me that I was actually overweight large cap growth, which I'm fine with right now, but it was really cool bouncing those statistics off of a benchmark to give me something to shoot for. So what I'm actually shooting for is a little bit more small cap exposure, a little bit more value, large cap exposure, and a lot more. I was very deficient in my international exposure. Who knew? So for you guys that think that just starting an account is starting an account, you're really missing out. Those picks that Avi A left there, that ticker symbol, can be used to generate your watch lists, and it can be generated however you guys want. You can go in there and build out your watch lists within your account. So when you log in, you're going to have all these tools at your disposal. If you're looking to draw up a certain stock pick or a certain ticker symbol, you can run that through certain screeners and get all the information that you want. The majority of the information that I get is right off of my brokerage page, and man, I wouldn't trade it for anything. It's fantastic. So I'd highly encourage you guys that if you're on the fence on trying to pick a brokerage, don't deliberate too much, because you're really missing out on some of the, stock offerings that they do, some of the recommended buys. They do fun stuff like what Warren Buffett is holding, so you don't have to reinvent the wheel. You can go on there and really understand how some of the bigger players are approaching the stock market too. It's really easy, and it games you up. It really does. It gives you that education that you need. So thank you, Avi. That's a really nice offering. I appreciate that. I'm scrolling through here, please. Scrolling through the group here. Player one, I'm clowning around, but Sears, or am I? Or am I? Yeah, 60 cents. I mean, how many shares could you buy at 60 cents? So you're going to buy 10,000 shares of Sears? No, I highly recommend you don't do that. It's in trouble. It's in trouble. I heard Carl Icahn is actually looking at some of the Sears bond offerings, actually, which that did catch my attention. That was really interesting. So he's got his team looking at some of the recessed bonds right now because they're trading at nothing. There's fear that they're going to meet their debt obligation, which is not going to be true. They're filing bankruptcy. So those debt obligations will be paid. They'll just be paid eventually when the bankruptcy settles out. So pretty interesting stuff, man. Got Officer Towers in the line. Certainly love to point give a shout out. Great to have you on the line here. So far, the only positive to working days instead of nights is I get to join the live stream every week rather than every other week. Man, that means a lot to me. It really does. It's really cool that I get to. It doesn't matter with me if I'm talking to one person. I get just as excited talking about money. The cool thing talking to one individual specifically is I can really get laser focused on what it is that where the need is, what they've got going on. And it's really cool for me, man, when it's just crystal clear for me and they're still like, what do you got? Help me out. And then I'm like, okay, let me explain what I see and then see if you can explain it back to me. And that's where the magic happens. It really does. In this group, I'm just addressing Q&A. But it's really cool to have you in the group, man. That does mean a lot to me. The positive comments haven't really got a lot of hate. I'm waiting. We're going to probably hit 10,000 subscribers here fairly soon on the channel, which is exciting to me. I still believe wholeheartedly in the message today, as I did the second I put my first video online. I really did. I try not to pay too much attention to the noise on YouTube. I still contend that I think a lot of the message that comes through YouTube, you've got to be very careful about being misled. But that's fine. Everybody's entitled to consume the content that they want. I just try to be as careful as I can about providing as much visibility with you guys and making sure that if you didn't find that there was any value on the channel or you weren't finding it useful in your own life, that would be not cool for me. But I continue to push out the message because I really do. I'm getting a ton of validation back that maybe they come by the Independent Investor channel and maybe they get turned on to investing for the first time. And that is really cool. We're doing our job as long as they're doing what they need to do to get invested and they understand enough to where, this market with all the volatility isn't going to spook out a bunch of people. That's why the market goes down 850 points in one day, is because of all the market orders that are being pushed through. And you don't know what you're doing once you hit that market order and it sells for, whatever you're asking just to offload the stock, which is really unfortunate. But it's really good to have you, man. I really enjoy validation like that. I do appreciate it. I really do. I'm doing this for you guys, and each and every person that comes and seeks out the information has their own kind of idea about what they want out of it. And what I've always said is plagiarize the information, man. It's yours. Use it. I mean, I'm as transparent as I can be on how I'm using the information. I would encourage each and every one of you guys to earmark what fundamentals I use. Take them, use them. Understand that there's just a staunch difference between the self-directed program and the managed program, and that we need more people generating a discussion on investing on your own. I mean, sometimes you'll have like a family member that's really good at investing, and they're the ones that provide you your financial counseling. If you don't have that, you tend to not feel like you're kind of alone, maybe. And that's why those avenues are sought out most of the time. And I think for a lot of people, the Independent Investor channel provides an outlet. It really does. I mean, how much exposure do you get with a financial planner? Do you get a monthly or a weekly meeting, a live feed with your financial planner every week? I think not. And I can speak in depth about that. I definitely don't want to misconstrue the message in that we're impugning the work of a planner, for example. But I've just seen way too many examples of unacceptable behavior. And it's about time that we start talking out against it and start to educate folks up on other options and make sure that they can make an educated decision and not one that's made out of blind faith. And I find that's the case a lot of the time, as those decisions are made based on I don't really feel right about this, but it's the only option. So I'm going to go ahead and do it and hope for the best, and not really understand why it is you're doing it. So I've got Lydia says, hello. She just got off work and came on to a live YouTube feed. That is really cool. I really appreciate that, man. So I'm going to probably keep it a little bit under control tonight, unless you guys have just an absolute burning topic to discuss. Please throw that in the discussion. I didn't script anything this evening. I really wanted to make it community centric this evening. So if there is any topics that you guys have for me, please throw that into the group and I'll address that. Otherwise, I'm gonna cut it a little bit short. We're gonna try to keep it under an hour tonight if we can. I always say that, and then I end up going for an hour and 45 minutes. But that's kind of up to you guys to use and abuse me how you guys feel. If you've got a question, no crazy questions can be thrown my way. If you've got the question, there's probably 100 other people out there waiting to ask the question as well. If you guys are interested in my specific strategy, when I got started, how much I got started with, how many brokers I've been with, I can bring all kinds of crazy stories from my fan, and I've been through it all. I really have. I got caught up in Scottrade when I first started. I lost $3 grand. That was one of my introductions to stock, and that I thought I was going to be able to trade penny stock and retire wealthy. I learned really, really quick that wasn't the case, and ended up getting me double in hock with the IRS, out of which I had to get myself out of. So for you guys out there, I still get a lot of content through the channel that's admitting to me about their use of Robinhood, and I don't mean to pick on those folks at all. Robinhood can work really, really well. I've seen specifically how Lydia uses Robinhood, and that's how you're supposed to use it. But I've had some people hit me up and they're like, I've already done 500 trades this year through Robinhood, and I'm not trying to be rude, but you've just generated 500 taxable situations on the short-term side of it. And why? How do I know? Because I've been there. I used to do that. So I'm not trying to say, hey, what you're doing is wrong. What I'm saying is, if you're making some capital gains, you need to make sure and put some of that money aside, because Robinhood is bound by a responsibility to report every single one of those trades. It automatically goes to the IRS. So, it's very, very easy to be brought in by the allure of the free trades with Robinhood. And I think it's a big pull. I really do. I prefer M1 Finance for that very reason. If paying $5 or $6 or $7, I think we're eventually going to end up in a position where the major brokerages do away with trading fees altogether. That's just my generalized statement to where I think the industry is moving toward. We've already got no-cost ETFs on the deal, so that's just where I think we're moving to. So are we going to have to resort for a platform like an M1 Finance to save upon? And I think that's a big draw for people. But I do still have a ton of people, man, that are, that's the first thing that they start. It's a brokerage account. And I always say, if you've started the brokerage account, that's okay. If you're a savvy investor, congratulations, because you're going to get addicted to it. You really are. It's a great thing to be addicted to. It's just as good as a hobby to have some financial savvy upstairs and be aware of your finances. Man, I've spoke with people who have had well over $50,000 in old rollover 401ks from old jobs that they didn't even know existed. They hadn't even looked at it for years. That's how crazy unaware some people are. And all I'm doing is calling for folks to be, aware. Now, I'm sickly aware. I'm aware of where every single penny is in my life. Everything's budgeted out, everything's paid, everything's done, everything's good. There's no hanging chads in my program at all. I know where every single penny is, for the sheer purpose of, if I can maximize, those pennies and dimes and nickels in my portfolio, that's exactly what I'm going to do, man. I'm scratching and clawing to try to get ahead. And I think some folks, they really want to do the right thing, but they're not willing to do the scratching and clawing, you know? So, you know, get a little bit fierce on this program. You know, being an investor is, you know, I don't want to say it's difficult, but I just think a lot of people are kind of unwilling to walk the walk, really. It's really easy to talk the talk, really easy. That's evident. Put on investing channels into YouTube and you'll see all kinds of examples of that very statement. It's very easy to just talk, blah, blah, blah. I could probably fabricate a hell of an independent investor channel. I've got quite an imagination, but I won't do that to the group. There's no way that I could sit across from someone like me and listen to a message and be like, wow, this guy knows a lot about investing, but he doesn't invest, or he invests like an idiot. You know, how am I supposed to resonate with my message if the audience is sitting across not taking stock in what it is that I do? And that would be unfortunate. It really would, because I'm very passionate about investing. I really am. But I'm also very, very passionate in sharing that passion with others. And that's why I talk about the empowering piece. You may put a couple stocks in your portfolio with a few $1,000s to start, and you may not understand why. You'll understand why as the years kind of start to go by and build upon themselves. Those validations will come. And then you'll really start to yearn for improving your program and really you'll be like, wow, a long time ago, Ryan mentioned a cash account. Geez, I really wish I would have been a little bit more aggressive on that. Or, wow, I'm really glad I was aggressive on that. Man, he was right. That's legit. You know, the market's corrected now. Boom, I can take a little strategic chunk out of that and put it over here to the investment. And you stretch those decisions out over an entire life. And you really want to allow yourself the opportunity to exploit those decisions along your life. If you choose to be a non-investor, your decision is already made for you. But becoming an investor, it doesn't mean that you're restricted at all. It means you're free to make those decisions, you know, as the stock market, you know, dictates. And the stock market allows you a number of those opportunities along the line. You may be wrong on some of those impulses, right? But I think the cool thing about the stock market is that if you have the courage to act on some of those opportunities, you will absolutely foster over time. You know, if you make a bad move, don't get down on yourself. It's okay. You know, I in retrospect over the last 2 weeks with the increased volatility, I'm very proud of myself for doing absolutely nothing. This right here summarizes the activity that I've had in the U.S. stock market for the last 2 weeks. 0, nil. I've done nothing. 0. And I'm proud of myself for that, because I know there's probably nothing good that's going to come out of it. Is it a time that I want to be aggressive on the stock market? The only thing that I've been really tempted on, the last stock I bought, I plussed up on JD.com. I did. But man, you telling me Alibaba's not tempting right here? You know, I only own 10 shares of the stock right here, but it's very tempting to kind of double up on that stuff. You know, I'm tempted to take another 5-share position in Amazon. I own 5 right now. I bought it at the absolute worst time, so I'm getting crushed. I'm down 15%. I'm not worried one bit about it. What I am thinking about is strategically buying 5 more. You know what I mean? So you kind of look at that, what I had just explained, and say, geez Louise, Ryan bought 5 shares of Amazon. That's pretty cool. The latter part of what he said is he actually has money to buy another 5 shares, you know, to kind of scale into the position a little more carefully. But honestly, I've made no, I should have bought Apple yesterday. I was inclined to buy 100 shares of Apple yesterday and didn't do it. I did not. But I should have done that. I own a lesser of a position right now in Apple. I think I'm around 20 shares of Apple because of my other tech holdings are so heavy. I've pulled back a little bit on Apple, but that's been fine. Try to get to some of these other guys here. Don't apologize for something you believe in. I don't know if you're talking to me, but let's scan through some of these here, guys. I really appreciate it. I've got Bob right, man. Thank you for your service. No doubt about it. My hat's off to you. Very cool. Maybe I should have shorted Amazon instead. I don't think Amazon is for everybody right away. I don't. I think it's a very, very investable company. It's a company that I have to invest in. There's no choice, none. I feel like I'm naked when I don't invest in Amazon. It's the same thing with Google, and Facebook is wearing off of me, but I've got a big position in Facebook right now. I've got long Facebook. I don't know if these security issues are being overblown. I don't know if all 1.5 billion active daily users care as much as the news media to beat down a good company like Facebook, who's now trading at recessed valuations across the sector. You know, it just kind of depends, you know, whether or not I would recommend a stock like Amazon. I've done portfolio building for a lot of different people through the community, and in some portfolios, Amazon absolutely makes sense. In other portfolios, you know, the high price to earnings ratio and multiple, it's a very spendy stock. You know, its beta is close to 5. So it's an expensive stock. You're paying for quality. It's valued quite differently than any other stock. I'm long the shares right now. Like I said, I've only got five shares. It's about, I want to say 5 or so percent, 4% in the portfolio, 5%, I think, with Amazon. And I tend to buy Amazon and Google at the same time. I don't know why, but I just think those are two of the big players. And I did up my exposure to cloud as well with my position in Adobe. I bought 10 shares of Adobe before all this craziness happened. And I was glad to do that. That's been on an absolute roller coaster that the last couple of weeks have been interesting to watch. I'm a little disappointed that I haven't been able to really kind of take advantage of it. But some of you guys, I mean, I think it was Jared Odell actually who offered Caterpillar, that is funny you mentioned that, because that's really tops on my list. I mean, I watched Caterpillar go. I remember wanting to pick up Caterpillar at $50 a share, and it's just one of those woulda, coulda, shouldas. And as you start to pay more attention to the stock market, you're going to understand that these good companies over time, if you took a couple months off of the stock market, let's say 6 months or a year, came back to the stock market and looked at that same stock, like a Pfizer, for example, had you looked at Pfizer last year, it would have been in the mid 30s, you know, and you look at it here and it's like, wow, it's been on a tear. Merck, same way, mid 50s. Now it's in the 70s, you know? So all these good quality companies, man, pay attention to it. Don't blow that stuff off. I'm a dork. So I enjoy, you know, following the stock market. It's definitely more than a hobby for me. It's definitely a lifestyle, but I do enjoy the hell out of it. It's not work for me at all. I really, really enjoy it. I really do. I love hearing good folks out as well and their opinions about what they're doing. So it's nice. Thank you for that, Jared. I was looking at that as well. I got about 15 minutes left. If you guys do have a comment in the line, I'm again, kind of under the weather a touch over the last couple of days. I've been working very, very hard with little sleep. So it's been kind of interesting. But I've got Greg Gatsby, man. It's really cool, man. Some of you guys, you know, it's funny the things that you remember, and it's, you know, I know we're approaching 10,000 subscribers, and I get folks hitting me up now that are brand new to the channel, man. But some of you guys, I feel like I know you, which I don't. But it's almost as if I do. It's really kind of cool, and I would think that would be kind of cool if I was a subscriber to the channel and the creator, you know, allowed for a lot more, you know, visibility with the channel. You know, I really try to respond to all the comments as best I can, the emails, you know, things like this. You know, this isn't very, from a monetary perspective, it's not a huge payback for me, but the value is providing the transparency. And it's just really, really cool to see you guys that have been with the channel for a long time. I think Greg was an original supporter of Scribner, kind of found my channel as well. I'd really like to know if anybody from Scribner's group actually went down and saw him. He put on a conference down in Dallas with the Millionaire Millennial, and Jordan's really good people too. I got to meet him, and actually, it's funny. Someday I owe that guy a big thanks, because his creative genius, man. He went in and looked at my channel and tweaked something. Really helped me, turn me on to Canva as well, which is a big key in creating thumbnails. I don't typically talk too much about YouTube and, hey, how to build a YouTube channel, because my channel's relatively small. But once I do get a little bigger, if some of the secret sauce does actually end up working and paying off someday, I will probably come out with a series of hey, here's what I did. And maybe that'll help somebody, because I think it's really cool. I tend to approach YouTube as being one of those investments that can really never go down. And for an investing mind like myself, that's extremely attractive. You know, not a lot of overhead. You know, we can build a business with empty shelves, but we still have customers coming into the building at any time, 24 hours a day, 7 days a week. You know, it's such a paradigm shift from the old mentality of renting a building, putting a product on the shelf, that of which we've put up capital to buy and place on the shelf, hoping that a customer will walk through the door and walk and buy that product, pick it off the shelf, pay me back for my original investment, and pay a little bit more than what my original investment was, rendering me a little bit of profit. It's the times are changing so much right now, and it's really, really scary, crazy, exciting, man, with the e-commerce that's going on right now. It's really exciting stuff, which is a huge reason why Amazon is just one of those companies that I have to have. So again, going 46 minutes here, guys, man. Throw your comments down here. Really want to try to address everybody if I can. Yeah, Caterpillar at the 52-week low. It's been nasty. It's really one of my favorite companies, actually. I've watched those engines go into boats, and their tech reps are really, really good. It's a great company. I'm partial to Detroit Diesel. Sorry. But so for you guys that want to buy Daimler Chrysler, you can do that as well. I think Detroit diesels are the best diesel engines in the world. Sorry. I've got my reasons. So if you're interested, hit me up. But Caterpillar is an awesome company, man. It's really, really good. I've got Jesus Caceres in the line. Thank you for all your info. Been seeing your videos. Hello from South Texas in Edinburgh. I used to live in Spring. So that's awesome. Nice to have you on the line there, man. Very cool. It's good to see you. Welcome to the channel, man. Stick around until you understand the pulse of my message, man. It'll really help you out. If you have any questions, don't hesitate to hit me up. So short Amazon and double or triple down on Sears or maybe Gold Circle. Yeah, sure. Super consistent too, Lydia. Big props. Yeah, absolutely. I'm not sure if you're talking about consistent uploads or consistent investing, but at least that's what I get the impression. I think Lydia's left a few comments on the channel talking about how she utilizes the Robinhood account, and I think that's just man. More people need to see that stuff and be like, wow, this person's doing this. I don't do squat. You know, I would feel bad. You know, if I was a young person, like, dude, if you're young, competition is fierce nowadays. Like, if you're a young person and you're not competing, you're falling behind. And I don't mean that to be condescending, but I can outcompete a lot of 20-year-olds, okay? And I'm 40. So, like, if you're 20 and you're not, like, getting with the program, like, you should have an investment portfolio. You should be rocking out career. You should be looking at a side hustle. You know, get a college education. I'm not one of those guys that's completely down on it, but do it right. You don't need to rack up $100 grand of debt to get a college education, man. If you want a college education, get it online. You can get it very, very inexpensive. You know, start on a trade, for crying out loud. 4.5 million jobs in this country. We are deficient in our trade crafts, man. Electricians, plumbers, carpentry, those types of works. If you're not learning a trade right now and you're a young person, man, and that's a lot of reason why I think, you know, the young folks that are offering their portfolios up for viewing, hopefully that's what it's doing. Hopefully it's got the cattle prod effect for a lot of young people, and they're like, wow, you know, I need to do this because Jesus, this person's doing it, and look what they're doing. You know, they can consider themselves an investor, and that's pretty cool. And that's really what a lot of the power of YouTube is. They may not know the first squatting thing about investing, but they may watch a channel like myself or her channel and say, wow, man, I can do that. And that's the first step to a much larger world, I think. That's from Star Wars. So pretty cool stuff, man. Let's see here. Ryan's the man. Yep, I am the man. I'm a tired man tonight. So we are going to go for 9 minutes and counting, guys. Great group. I hate to kind of cut it short tonight, but I know there will be a lot of people that replay it. I still need to kind of work on the video a little bit. I will be continuing with the final 2 installations of the Dividend Aristocrats. I will give you guys one of those 10 picks, and it will be Johnson & Johnson. I guarantee it. It's one of my absolute favorite stocks, honestly. And during that video of the stocks that you can own forever, I hope some of you guys really heard me on the Procter & Gamble. Some of the analysts, you know, kicked it to the side a little bit. It's dead in the water, you know, $200 billion company, man. Look at their suite of portfolio of products that they offer to people. Majority of the products you've probably got or use on a day-to-day basis, man. So, you know, if you had got in on Procter & Gamble, again, I'm not one of those guys that get on here and toot my own horn about recommending a stock that goes up the next day. You know, I should have come out with a news alert. You know, Procter & Gamble goes up $7 today. I don't do that. I'm not recommending a stock because I think it's going to go down. I'm recommending a stock because I think it's going to go up. I don't think it's going to go up like it did today in one day. It's a value stock, right? But what it will do is it'll pay you a nice 3% dividend over time, and it will eventually appreciate in value. You see the difference in philosophy. But for you guys that actually picked up some shares in Procter, really good buy. And again, you had your opportunity in Apple as well. Johnson & Johnson, JP Morgan, and Disney. Those are my 5 stocks you can own forever. That's it. It's not a big secret. I did kind of disclose that perhaps maybe, you know, there's a few other names that I could kind of pick in there and maybe stretch to 10, for example. I could do it off the cuff. You know, Pepsi is one of those companies that, you know, if you can make any room in your portfolio at all for a great company like Pepsi, that's something that you want to do. So kind of keep your eyes open. Those videos will roll out over the weekend as well to finish out that installment of the dividend portfolio. I'm happy with how they turned out. I will be throwing extra information into the Facebook group on each one of those holdings, a little bit more detailed review, kind of some of where I got my substantiation to buy those stocks as well. So look for those. I will post those in the Facebook group. That group is growing very, very well. And for that, I'm very thankful for you guys. I hope you're finding the time spent on the group valuable and worth your time. So I've got Kane on 7, and I got Russell right above, man. Great channel. Thank you. I really appreciate it. Running kind of a sincere program, kind of a, hey, I'm a regular fella type of guy. Why is that? Because I am just a regular fella. Yep. Work hard every day. I don't do YouTube to put food on the table. I don't. And I won't. I won't. So just doing it to get folks the message. And if for nothing else, over the last couple years of doing YouTube, I've done nothing but validate that people need this information. And until I start to drop off on some of those validations for people, that's when we'll cease to exist on YouTube. But it's to the contrary. There's a ton of people who need this information. And I'm seeing across the news media, you see every single time, try to watch CNBC without seeing a financial advisor pop on there and talk about how, you know, they took care of dad and now they're taking care of the daughter, You see the different generational, right, to where they're trying to advertise to the younger generations. It's all crap, all of it. It's all big, big money, big propaganda, man, trying to steer people who have really no business giving away or surrendering that much money to the big institutions, man. And that's really the niche. And they're kind of stuck between a rock and a hard place because they can't talk about the stuff that I'm talking about because it's not profitable. You see what I mean? Most of the big companies offer self-directed programs. Most all of them do. All of the ones that I talk about, you know, Fidelity, TD, E-Trade, Merrill Edge, Vanguard, all of them. But you're not going to ever see a commercial on TV saying, hey, come and take advantage of our self-directed program. The most open with the self-directed program is my broker through Merrill Edge. But they'll never advertise for it. Never. No way. For every one customer like me, there's 10,000 customers that go and just park their money in a bank and don't do anything with it. Those are their favorite customers. The customers that start a credit card and they pay 30% interest a month. Those are the best customers of the bank. The guys like me, they don't make a dime off of. So they make a little bit. They'll invest the money that I'm pledged to the bank, but I'm happy with that. But as far as fees, I pay nil. And that's what I want for you guys as well. I've got a couple minutes left here, man. I am going to try to wrap this up at a half hour here. Make sure we get kind of down to the end. This has been a really fun, therapeutic. See, you guys, I just flipped the script on you. You guys were my therapy tonight, and I really appreciate that. I can hardly keep my eyes open, no doubt about it. But I wasn't going to miss the live feed tonight. I really wanted to address and talk to you guys about the roller coaster over the last couple weeks. You guys know what I'm doing. I didn't buy Tesla this week, so I apologize for that. I did not, so I apologize. We'll look at it next week and see if we can't take a nice stake in Tesla. I'm just kidding, but not making any moves in the stock market. And I think that's kind of interesting for you guys to understand how I hit the pause button during times of volatility like this. So I've got Lydia who's hitting me up. Financial oh, you guys talking to Brent. I got Brent on the line. This is the first I've seen him pop in. I saw the reply on the group, Brent. So I don't know. I appreciate you popping in here. I'm probably going to cut it short unless you guys want to see me fall asleep. That might be kind of an interesting video. The first YouTube creator falls asleep on his video. It'd probably go viral, actually. That might be the secret for getting me my first viral video, is falling asleep while I'm talking about investments. That might be kind of cool. So let me kind of scroll through here. I've got Mike Lowry in the line. Realty Income is also a master limited partnership, or no. I've considered that as well. FI, GE is going to turn around, but it will take some time. Yeah, I'm waiting General Electric out. I did take a small position in my SEP IRA, but it's only a few shares. And I kind of looked at that from a perspective. If I had $1,000, how would I invest it into single stock? And I think I picked up Cisco, Blackstone Group. I picked up Intel, General Electric, and Pfizer. Those are my 5 stock picks in my $1,000 portfolio. So just a couple shares each, right? No big deal. You start it off, start the dividend reinvestment, man, and we're going to watch it grow. And I'm going to chronicle that account over the life of the channel as well. We'll watch that grow. They grow. That's what they do. If you start it with your money, you know, your accounts are going to grow as well. So Robert Lapointe, take it easy, man. Have a good weekend. Thank you for stopping by, man. Thank you so much. Really appreciate it. Have a great weekend. Very cool of you to come in, man. I'm going to wrap it up here pretty quick anyway, man. So anyway, just making sure that I've got Ernest, man, my good friend over the channel. Please hit the like button. I guess the algorithms pick that up and they support the channel if you do. So pound that like button for me to support the message. See, I'm getting better at it. I'm getting better, right? Just got to get a little bit more charisma. Got to come up with a catch line so I can trick people into coming to the Independent Investor channel. I'm just kidding. Guys, thanks a lot. I'm gonna kind of scroll down, make sure I got all the questions. Hey, Ryan, blue collar investor checking in from the Motor City Detroit diesel. Okay, so I got to comment to that. I can't leave that one. I would have been upset had I ended the stream, and I've got Mixel on the line. So I've been to the plant in Redford. So watching the new Detroit diesels get built, man, pretty amazing, pretty darn amazing. So definitely a shout out to Detroit. I would not buy Ford here, so please don't do that. I hope you're not offended. But absolutely, Daimler Chrysler, man, is a great stock. Smaller division, but making the best diesel engines, I think, for the Freightliners in the world right now. Y'all should be proud of that. That's fantastic. So a shout out to the Big D, man. Very cool. Motor City, man. Love it. I've got, why have you chosen to invest in individual stock picks when research shows it's hard to outperform the index? Yeah, so I'll address that question. It's really interesting. And this is where I talk a lot to folks who are looking to start in the stock market. If you have $10,000 or less, I would absolutely take the route that you're choosing there, okay? You want to become a passive investor. You want to get your risk tolerance defined in the stock market. I have that passive baseline, and that's an account that I don't disclose over YouTube, okay? My account that I disclose over YouTube is my stock portfolio, and you have to understand that I use that stock portfolio as just one single pillar, all right, in my total overall portfolio picture. So I am a passive investor with my baseline, with my employee sponsored. And you also have to understand too, everybody has a different application when they are setting up their financial picture. So what you talk about there in choosing index funds, I would tend to opt for an ETF over an index fund for my own personal preference, depending on the index fund that you opt for. And this is very easy to understand what I'm talking about. If you jump on Vanguard and pull up the total stock index, which is, VTI, you can see the comparative index funds. They're going to be the same holdings, but the fee structure is going to be a little bit different. You're going to have a required minimum in certain index funds. You're not going to be able to buy the Admiral shares in different brokerage accounts that can only be held at Vanguard, right? So for most investors that are starting out in the stock market, that's the absolute route that you take. Now, with regard to your outperforming the index, here's my thought on that. When financial planners come on and then they bag everything that a self-directed investor is doing, why are you investing in the index? Why are you investing in single stock? My response is this: if you look at what all the institutional investors are investing in, there's no sub-stock market, okay? There is the stock market, okay? And they want to draw your attention away from the stock market as much as they possibly can to make you think that they're somehow enjoying a strategic edge by entering into single stock. Now, will AT&T beat the market this year in accordance with what you're saying, right? It may or may not. But my thing is, over time, I'm investing in a company like AT&T specifically because I don't want to invest in a bond holding within my Roth IRA account. So AT&T gives me that dual benefit of being paid the 6% dividend, as well as the possibility for some capital appreciation. Now, if you looked at the individual stock compared to the index, individual stock index, January 1 to January 1 to January 1 to January 1 for the next 10 years, okay? You may have a few of those years where a single stock like AT&T underperforms the market, okay? And that's no reason to not invest in that single stock, because over the course of that 10 years, I would contend that a stock like AT&T at the most unopportune time or the most unobvious time is going to actually outpace. Now, keep in mind, every quarter, those dividends are rolling into there, right? So that's a pretty good annual guarantee at 6%. So it doesn't have to appreciate a whole lot to start to get you that alpha when you start to compare it to the market. All right. So it's really interesting, man. And it really just depends on where you are, what your age is, what's your risk tolerance to the stock market. But you need to kind of understand that I've got that passive baseline already. So I utilize the self-directed account to build myself that dividend portfolio that I disclosed to you. So I hope that answers your question. I could be dead wrong. But here's the thing. With the stock market in its current condition right now at a record high, I would rather own single stock than the index. That's just me, okay? For somebody with $10,000, they could have the entire thing right now in the S&P 500, and I would be completely fine with that as well. So it's really a relative perspective, and this is where a lot of people can get confused. It's like, I want to have your stock portfolio. Well, my stock portfolio has evolved over time, and I went through some of those, phases of just being a mutual fund investor. Mutual fund investor. I mean, I burned up my first 10 years being a mutual fund investor. Do I regret doing it? No, of course not, because I used that capital to game myself up and step into a much larger world. Another thing that I will offer to that, and this the best question of the night, no doubt about it, and I really appreciate it, is think about it from this perspective, okay? Most people out there that buy single stock do so in a brokerage account, okay? Fully taxable, all right? If they get scared out of the market after 365 days, they're going to pay short-term capital gains on that tax. Maybe they keep it long-term and they don't subject themselves to that. It's maybe long-term capital gains tax, or maybe they hold it long-term. All right, but they're going to succumb to fees in that account. It's the same thing with a managed Roth IRA account. All right, you take the same stock, AT&T, and house it into a managed account. You're going to pay $50 just to get into that account in a managed account. They're going to charge you to dividend reinvest that. They're going to charge you to dollar cost average, right? So my idea is what I've just explained over here. You take all that and take the same AT&T, because trust me, brother, there's only one company that's AT&T or Apple or Wells Fargo or Johnson & Johnson or Pfizer or Merck or Citigroup or any of these good companies that I talk about. And the strategic benefit of housing those good quality stocks in the self-directed account is that everything that I just named over here that charges you is free of charge over here, right? So you're not going to be consumed owning the exact same names over here. So it has a lot more to do with your plan over here as opposed to, outpacing the market or, worrying about if one of your single stocks doesn't outpace the market. You're at a strategic advantage over here because I don't have a management company consuming my AT&T dividends, right? Every quarter, those are paid to me. I choose to roll those back into the stock. They don't charge me for that service. So it's more of a fundamental approach to the stock market is if you can just get your holdings in a liberated account, it's going to make a huge difference over time. It's going to make a huge difference. And I'm approaching $500,000 in assets, So it really does work. And I've never really worried about outpacing the market. I really don't, because I've got part of my holdings that are actually the barometer, for a lack of better terms, on the stock market, right? So I've got that working for me. And I've got other pillars in my portfolio that are working as well. I've got a bond pillar as well, the self-directed pillar with the dividend portfolio that I'm rolling out to you guys. And then also the growth section as well. The growth section is very important as well. If you can stomach owning a Salesforce.com, I encourage you to do so. If you can find, the stomach to buy partial shares of a company like Google, you got to do it. You got to do it. And I endorse those moves as long as they're done at the right time. So that right there is the question of the night. I really appreciate it. I could talk all night about that very thing. I think Jazz Wealth came through the Facebook group, and he pretty much offered the same thing. Like, why would you buy the S&P 500? You're stupid. Why would you buy single stock? You're stupid. Why would you buy the S&P 500 and a single stock? You're stupid. Okay. Well, it's like Look, if I'm not doing anything other than giving you my money, everything that I do is stupid. You can't have it both ways, bro, because the Apple stock that you buy is the same Apple company that I invest in. All right. The difference is I'll win over time, whereas your clients, they're paying you, and I won't do that. I don't play ball that way. And at the end of the day, I sleep very well knowing that I'm in a liberated program. Okay. With all due respect, I don't need to share my money with anybody. I'm the one that earns it. I'm the one that keeps it. So a small smidge of my message is on principle as well. It's on principle. If I'm going to lose in the stock market, I'm going to do it in a program that I administer, right? And that's really one of the fundamental messages of the channel. It's very liberating to see how your dollars will perform. And if you've ever looked at your brokerage account statement at the end of the year and wonder, wow, how the hell did I not, at least perform to par, in the stock market? And then you start looking, and this is what happened to me. I start looking at my performance in a mutual fund. The stock market's up 10%. My mutual funds are down $300 for the year because they're being consumed. So I'm taking all the risk, right? Paying all my fees to have the honor of investing with a company. They're investing in the same stuff that I just talked to you guys about. Look at the major holdings in the ETFs. Look at the major holdings in the mutual funds. They all own the same company. There's only one stock market to invest in. And the trick is to plug yourself in directly to that stock market and eliminate the middleman. All right. Very cool question. I really, really appreciate it. It does make sense. And it's a lot of fundamental explanation. You know what I'm saying? The greatest path to wealth in the stock market is single stock ownership. And a lot of people are scared away from that prospect, because of idiots out there that are trying to talk you off of single stock, because single stock investing doesn't benefit them at all. It's a pain in the rear. You know what I'm saying? Like, you're not going to go down and sit with somebody like Jazz Wealth and he's going to say, I'm going to build you a 10 stock dividend portfolio. It's not going to benefit him at all. You know what I'm saying? It's not going to benefit him. Financial planners are even worse, right? They don't want you calling every 2 or 3 days being like, I'm up 10%. Can we sell? That's a pain in their neck. They don't want to do that. Whereas as an independent investor, I do what I want, when I want, how I want. And it's amazing to where you guys will see that validation for yourself to see how quickly your dollars will appreciate, if you allow them to be placed in the correct bucket. And that's the key of the channel. Since you're going for the blue chip dividend payers. So that's the other part. Right? Since we know strategically we're already a winner over here and we're not losing the 3% out the bottom, I just take the best of breed and house them into a liberated account. That's the essence of the channel and the message. You never have to watch me again. It's wonderful. but people do, because there's a lot more to it than that. People always want to evolve. And you're going to reach those thresholds. You're going to get to your first 10,000. You're going to get to your first 25,000, 50,000, I still remember when I made my first $10,000, that was the greatest accomplishment in my life so far. I don't even remember making my first 100,000. I don't even remember. I don't even care, because at that point it was so ingrained mentally that I was so embedded in my plan that when I made my first $10,000, those validations really weren't in place, And when you make that first 10 grand, you're like, holy crap, I can do this. And that's when you really start to internalize what's possible in the stock market, man. Once you start to, achieve something that's greater than yourself. I mean, how many of you guys out there that are still here, I've got 60 people in the group, actually see you guys as having, hundreds of thousands of dollars someday. I want you to aspire to that. If you're not investing to set yourself up for financial security down the line, then I don't even want you to take the risk, because I say this all the time. If you're not mentally prepared and you're not willing to take those chances, you're going to take every excuse that you can to talk yourself off of the stock market, and you'll end up moving away from the stock market eventually, And the trick is to not overexpose. That's one of the key takeaways. When you build your portfolio, Build it to an exposure level that you're comfortable. No more, no less. There's no right or wrong answer to this. There's no perfect allocation either. You know, if your perfect allocation out of 100 grand is 20 grand, then I endorse it. Okay. If your risk tolerance is to say, Ryan, I think I want to go half. I think I want to do 50 grand out of my 100 grand. And it's all relative. It's the same fundamental thought. If you had $10,000 and you said, Ryan, I think the stock market's at an all-time high right now. What do you think about me just putting $2,000 to work? Now you're thinking, right? I've strategically opted some money. And again, back to your point, when you're talking about why not go with a passive index, you see, to the contrary, if you go into a financial planner with $10,000, they're going to say, here you go. We're going to put you in 4 of these mutual funds, right? So is that in your best interest, as opposed to taking a plan like mine and saying, hold on a second, I've got 10 grand, right? I want to start with 2 grand. I want to set it up as a dollar cost average free of charge. Maybe put a dividend payer in my portfolio. 1, set it up for dividend reinvestment, right? Hold some cash on the side, right? Right? Hold some cash on the side because, hey, I worked really hard saving this up. I came across the independent investor channel and I want to put some of this money to work, right? That's the strategic thinking that I talk about. And in cases like that, if you came to me and said, Ryan, I'm really interested in investing in a company like an Apple Computers, I'm all about it. If you're interested in opting for a company like Procter & Gamble, I'm all about it. Look at their portfolio of products. I said this on the video, when you invest in a single stock like Procter & Gamble, yes, it's a single stock, but look at how many good quality products they represent. They have what's considered a wide moat. And that to me is extremely important, not to be overlooked. We don't talk about it very often on the channel, but very, very important for folks to understand, man. The importance of owning single stock cannot be understated. It's just that I can't come out and just say, go buy single stock, because I know that a lot of new investors don't have the necessary tolerance to take single stock into the swings that it'll deliver, okay? And that's why I don't advocate for it right up front. I advocate for getting to that first 10,000 passively. That was a killer question, man. Very, very cool. Now I've went to an hour and 20. See, I told you I'd go for an hour and 45 minutes tonight. No, I'm just kidding. But yeah, investing is simple, but most people don't care to educate themselves and are scared. That's correct, Brett. I've been reading the word of Jack Bogle. There's some killer YouTube videos, man. Jack Bogle interviews that he offers online. I don't need medicine man like Jazz Wealth to survive in life. Yeah, there's some pretty good opinions on my Facebook group there. To each his own. I don't wish ill will, but there was a few gaps in that program. If it's such a cool thing, then why not disclose how much fees you're ripping people off? I mean, charging people. Be open with it. I find it crazy, right? That you think your information is so interesting that you can come on and try to charge people for it. I don't get it. We're not in that time anymore. Like Brent's talking about, man, the times have changed in that the information you could use your brokerage house or your investment platform as your sole source of information and be so much better off in your investing decisions. Come to the channel. Like I offer my services, man, and I think it's pretty legit. I'm there to help. Don't tell anybody you got your investing information off of YouTube. You may get laughed out of the room. That's freaking fine. The times are changing. I'm sorry. I think there's a poor precedence set by a lot of other channels on YouTube. But I think YouTube is becoming a very, very popular platform for folks to come on, educated folks that can decide for themselves whether or not they want to consume the content or whether or not it's appropriate for them. I know a lot of people have come onto my channel and hated the hell out of me. They leave and they never come back. No problem. It's not for them, but for the folks that, really are like, wow, I can do this, Ryan, I'm on board. That's where we start to build the community and offer real value for folks, knowing that this stuff is available and out there for them. So I'm going to kind of wrap it up. I scroll to the bottom here, see if I can't get any more of these comments taken care of. What is the best free website for researching stock? NASDAQ.com, Bill. So that's the best one. But I don't think you're going to get as good as information as you will if you you need to opt for your brokerage account. That's typically where I go for all my research. I typically don't go to open source over the internet. I go within my account and do most of my research. So Buffett is an investing genius too. He more or less buys large stakes in companies and buys and holds them for a very long time. You got to watch Becoming Warren Buffett. And, you know, it's really funny you said that. Yeah, he's a genius investor, but I just think he's just a really cool guy, actually. It's just funny what I saw in the hour, man, when he talked about his wife, you know, when she passed on. It's very emotional. The dude's legit. The dude's legit. He's got... you know, I'm a stock investor. I don't come out with videos investing like Warren Buffett. I just don't do that. I don't, it doesn't suit with me. I don't get it. Yeah, the guy's a genius. It's great. The story about how he ended up formulating Berkshire Hathaway is an amazing story. I just think he's a cool dude. And that's the part of it that I kind of took out of that video and you know, understanding, you know, what Egg McMuffin he's going to buy on when the stock market's down. He's going to pay $1.37 on one morning, and he's going to pay, you know, $2.17 on another morning if the stock market's up, you know, and he's a multi-billionaire. You know, his work in philanthropy is amazing. So that's the part that I kind of, his friendship with Bill Gates, that was cool. Things like that is what I took out of it. So guys, with that, listen, I'm gonna kind of wrap it up. Really appreciate the group, man. Thank you guys for your time. Went a little bit over budget, but I figured there was a few, that last comment, I really appreciated that. That gets me excited about answering a question like that. There is no real right or wrong in the investment world. You know, I mean, there's folks out there advocating for penny stock investing. Is that right? Well, I don't know. If you can make money doing it, great. But you have to look at kind of the success rate of people doing that. And what I've always contended is that, yeah, investing in single stock is different than passive investing, but it's something that anybody can do it. It's scalable. And if you understand about the uniqueness of the self-directed program and meeting up those single stock assets or index funds or ETFs or whatever it is you choose to do, you're winning the battle. You've got a significant leg up on any level of knowledge that anybody else out there has. Tested. When you guys are out there talking to your friends, man, ask them if they've ever heard of self-directed investing. They're going to look at you like you have two heads sticking out of your shoulders, guys. So with that, I'm going to sign off. You guys have a killer weekend, man, and we will do this again next week. Thank you so much, and I'll see you guys next week.